Hello, and thank you for joining us. My name is Angela Ost, and I am the Director of Plan Giving at Cornerstone Advisors Asset Management. And joining me, as always, is Avery Coleman, Cornerstone's Plan Giving Investment Analyst. And we are back to discuss another important topic that comes up quite frequently when speaking with clients and prospects. Today, we are discussing the importance of performance reviews of your charitable gift annuity assets. While we understand that these assets are likely not the largest pool of assets that you and your finance committee and your finance team are reviewing, in many instances, these might be some of the most highly regulated assets that you have at your organization. So it's very important that you understand how you're invested, the cash flows, the expenses, the withdrawals, everything that takes place within these assets. And within these pools of assets, I should say. So here at Cornerstone, we suggest that you meet with us at least annually. If you have a more complex program, maybe a more active program, certainly we can meet more frequently, but we suggest at least annually. Within that annual meeting, we'll spend some time reviewing the macroeconomic overview. We'll take a look at performance for the quarter as well as an extended period of time, maybe over the last year, 5, 10 years since inception. And then we'll take a look at your program specifics. So let's break it down for you here. Avery loves talking about the macroeconomics and the investments within each CGA pool that we manage. So Avery, what can everybody expect during this portion of the meeting?
Well, so the goal of this portion of the macroeconomic overview is to give people an idea of what we see in the market. I spend a lot of my time during the day researching, so reading as many articles as I possibly can, speaking to managers who we utilize, joining conference calls of groups of experts who talk about different macroeconomic issues. And our goal is to be able to synthesize that and tell it to our clients in a way that is understandable and is easy to kind of see. If somebody asked you after a meeting with us, what is your program invested in and why? You don't have to necessarily know exactly every position or anything like that, but to be able to give a basic summary of what it's invested in and why is kind of our goal. And I really love when I get a bunch of questions. There's no possible question that anybody could ask that's a bad question or that's any worse than a question I've ever asked specifically. So I think the biggest, most important thing is for people to be comfortable enough to ask whatever questions they have. If it's a question that doesn't necessarily deal with the investments in your CGA pool, but just investing in general, so that you can use for your own knowledge, that's great too. I really just, our whole intent here is to make sure you're comfortable with the way that your portfolio is being managed, and that you understand, to the extent that a person who's not an investment expert understands, what and why the portfolio is doing what it does. Definitely, we have like little pictures. We'll get charts sometimes too. I'll try to explain those. And we call them so that's not the most jargony charts that you can possibly imagine. And if I do get too jargony or talk too long, like Angel said, I love talking about investments way more than I think a lot of people around me would prefer. But like, this is the opportunity to just unload everything you've got. And I would like I'd love taking on all those questions.
So my guess is, Avery, that another reason that this is so important to discuss is the fact that what's going on in the macroeconomic environment that we're experiencing currently, or maybe historically, will lead to how we invest in these assets as well. I'm assuming we would probably make changes, which is why we're telling you a little bit about what we're seeing or what we're expecting to see.
Right. And some of the changes might not exactly be switching a fund. So generally, as we've talked about in previous videos, the funds that you're in are going to be broad ETFs that represent an entire industry, sector, market, things like that. So, and that's what we want. We don't want to be super narrow with these type of investments. And so generally, we might not be saying, okay, we see X in the market, so we're switching funds. We might say we see X in the market, so we're going to move your allocation a little bit less equities, or a little bit more equities, or something, or maybe a little bit more international, or maybe a little bit more of alternative investments for some situation or another. And I really want to make sure that as clients, that you can draw a line from what we're saying in these macroeconomic overviews and where you're invested. So ideally, and you're not going to hear us saying, we expect fixed income to do well over the next X period of time, year, 2 years, and then you're invested 10% fixed income. So it's not only just a way for us to try to inform you of what we're seeing and why we're doing certain things, but for you to kind of audit us and know that, okay, what they're saying is matching up with how the portfolio is being managed, because we don't have a crystal ball. So there are going to be times when we see certain trends or anything, and we read about things, and that's not necessarily the case. So to be able to, as long as the process is what is most important, to validate the process, we want to tell you what we're saying and why we're doing certain moves.
Makes perfect sense.
Yeah, and then after that, the a little bit more fun, a little bit more relevant part, Angela goes into the performance of the assets and manager performance and things like that.
Correct. Yes, this is where we really like to take a look at the quarterly performance. So what's the market value? What were the flows in and out of the pool over that last quarter period of time? And where do we stand at the end of the quarter? This is where we take a look at, what kind of payments did we make to annuitants? What kind of expenses are we finding within the portfolio? Did you add new gifts that we see some cash flows coming in? Then we'll dive into manager performance a little bit more. Again, Avery typically jumps in here and we'll talk about if we're swapping out any managers at this time or doing any overweight or underweight to different asset classes. And then we really like to take some time and look at the historical performance. So many of our clients we've worked with for a couple of decades, so we have some really great historical performance numbers to see some trends all the way back to many, many years ago. So we like to see, how have we performed quarterly over the past 10, 15, 20 years? How many new gifts have been added? Where do we see cash flows coming in? How much have we been paying to annuitants over the last couple of years? And where do we stand today? So at that point, it's always very interesting just to kind of see like where we're adding and removing flows and whatnot throughout the portfolio. But I think most people find this part pretty interesting to take a look at.
Yeah, and one of the things that I know that when we have these meetings that clients kind of latch on to, we've talked in previous videos about diversity of your donors, diversity of your investment portfolio. All of that's important. So not having all 20-year-olds. I mean, ideally you have no 20-year-olds, but not having all 55-year-olds, not having all 90-year-olds, something like that.
Right, absolutely. And then that's where we really like to dive into the last part of our review, where we have a report that is just a high-level portfolio snapshot of the CGA pool itself. So this is where we're going to look at how many donors do you have, how many CGAs are in your portfolio, what are the ages where your annuitants really range from, and what's the market value associated with their gifts. This is where we'll take a look at how many gifts are added and terminated throughout the life of your CGA pool. We'll also take a look at the reserves for different states that we know that you are reserved in, and are you within the reserve and surplus requirements? Do we need to make any updates to that area of your program? So this is a really great report that people typically like to see, just to kind of have all of their statistics just in one spot.
Yeah, and so the macroeconomic overview is for you to draw a picture of how the assets are being managed. And then the performance review and the CGA pool review are more to get a sense of who are your donors, how are they? And then also how much money can you spend from your pool, right? Isn't that where that information comes from?
Absolutely. We can see if you have any excess surplus at that point, that maybe at this point you can withdraw some funds, but you want to keep a buffer in there should there be any types of market corrections, but it's certainly a talking point. Yeah,
because at the end of the day, we want to use this money. I want as many institutions to be able to do what they want to do. So sure. That part really tells us hey, we see in your account, you have this much over what you really need. And maybe if you need to build a thing, please build the thing. We love building things.
Absolutely. We want these proceeds to be used. And I think, last but not least, we can't emphasize how important it is to have these meetings with us, not just to meet with us and to understand what's going on, but to take notes of what's going on. A lot of states require that you are reviewing these assets annually, and you want to have meeting notes stating that, because you will be asked during your different examinations as well as on the annual filing that the board has approved the review of these assets. So take some time, meet with your advisors, make sure you understand fully what's going on within these assets. We understand that they're likely not the largest pool of assets that you're reviewing, but they, like I said at the beginning, these are very highly regulated assets and they're very active assets. So flows are coming in and out all the time, and you want to make sure that you understand all the components of the portfolio. Absolutely. So with that, thank you again so much for joining us, and we hope that you found this information useful.